All right, good morning, traders, and welcome to the opening bell. Today is Thursday, July 30th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. We got some fireworks yesterday. The Fed held rates as expected. Warsh giving us little in the way of forward guidance. No surprise there, but certainly we saw a large reaction on the US dollar crosses, mostly the dollar just losing steam despite a rise in Treasury yields, with the 30-year and the 10-year really stretching. I think the 30-year here at 20-year highs yesterday. So we'll take a look at the aftermath of the Fed as all right, great to see everyone in the room this morning. Hey, Latanya, thankful Thursday. God bless you. Chandra saying good morning as well. Acacia, I hope I'm pronouncing that right. Andre, Angela, Ashish, Jan, Ken, Maury. I'm not going to get to everyone. Huge list today. Great to see you guys all in the room. So here's the DXY. Yesterday's decision caused a decline of more than 0.6%. Recall that we were trading right at resistance the previous day, and we were talking about the objective high day close for the year at 101 spot 58. We peaked just above that. Here's the reversal. Now, yesterday did break the May uptrend, and we closed below it, with that decline settling and now testing the first pivot zone. Here's the 4-hour chart. Remember, initial support was at the monthly open. The weekly range low is right there. That break invalidated the upside bias. Initial support, here's key support. Okay, so we still have a little ways to go before we start to invalidate anything major. Here's the XY on the weekly chart. The level we're talking about is 100 spot 15 into 42. That's the objective 2024 low, the 2024 low week close, the highs from July and the highs from November. This year's opening range high. There's the breakout back in June. That's the key pivot support. Okay, and that's also this month's range low. So a level that would need to break for the bears to really reassert control here. Hasn't happened yet, but we are on the precipice. Here's what it looks like again on the daily chart. So your monthly range essentially never broke. Here's your first couple of days of trade. You set a high low. You tried to break that low on the 15th. You reversed right back above. False break scenario. Tested that level of support again. Failure at the upper range of the month. That was the exact range high at the high day close, 101.59. Here we are back again at the monthly opening range low. So a break below this section would look for a final test of 100 spot 15 into 34 on the daily chart. That's the high, the low day close and the 2024 low, as well as the August highs and those November's highs I was telling you about. That's the key level. Okay, weakness below 100 spot 15 would be necessary to validate a medium-term short bias. We're not quite there just yet. The risk is still lower near term, but that's a key support level we really want to pay attention to. Look for a larger inflection there, a larger price reaction if reached. Okay, initial resistance now goes right back up to the monthly open. It's 101.22, and again, 101.59 is the high day close. So the levels are well defined here. I'm looking for a larger reaction near 100 spot 15, 35 if reached. Note that that's also a basic 38.2 retracement of the advance off the May lows, and pretty darn close to those June range highs as well. So we want to be very cautious here. The focus and the risk still remains to the downside. Now, why did this happen? Why did the dollar sell off even though Treasury yields are moving higher? Guys, let me take a step back. What did Warsh tell us? Didn't really tell us anything. He said growth is solid. He said unemployment is keeping up with the pace of job growth, and that things are pretty on a stable footing from the economic standpoint, save inflation, right? You saw yields rise, but the dollar drop. Why is that happening? The biggest question I've gotten over the last 24 hours. Guys, if we look at the Fed fund futures, I've been showing this to you daily. We walked into this interest rate decision with the largest uncertainty in more than like 20 years, maybe 30 years. Remember, we came in saying that there was still a 35% chance for a cut Usually right ahead of the Fed decision, you're in the 80% range. Markets are pretty well set to know what to expect. So the September read heading into this decision yesterday was at 20%, 19.8 to be exact. If you remember in the webinar yesterday, that we were going to see a hold in September. Now that's up to 42%. It doubled. And so that interest rate expectation for a hike getting kicked out has hurt the dollar and seen this pullback. The other side of this coin is that there are some, again, just chatter and just looking over the economic reports and the news headlines, that concerns that investors are starting to think that the Fed is falling behind inflation again, right? This happened during the Biden years. We were hitting, what, 8%, 9% inflation. And there was kind of a reluctancy because it was quote unquote transitory. So we're not using the quote unquote transitory line right now, but certainly with Warsh not giving much forward guidance, now the chatter starts to come up. Are we falling behind the inflationary outlook again? Dollars taking it on the chin, right? So we want to keep things in level ground. If we look at the if you take a look at this, the 30-year on a weekly basis, these are the highest levels that we've reached since way back here in 2007, specifically July of 2007, 19 years. So yeah, we're testing the upper bounds of a multi-year range, a contractionary range. We were tracking this for quite some time. We broke out of last year's downtrend earlier this year. We even tested it as support at the 52-week moving average. Here's the launch as we approach new highs. Momentum still hasn't broken to overbought, but obviously this is a bit of a concern. So a bit of a divergence here with what's happening in the yield territory, but more in line with markets really shifting their expectations that this reaffirmation from the central bank when Warsh took the head that we are going to approach, or we're going to reach price stability. Here's the release. Some people have a big problem with this Fed release. I love it. Okay. I'm not a big fundy guy. I didn't like those long multi-paragraph Fed releases. He's giving you just the facts, just what's going on. And certainly economic activity expanding at solid pace. And the concern is what's going on in Iran. And we'll obviously talk about that in a moment. Any questions on the DXY? Looks like we're going to make that test potentially here today. Watch for a reaction at 100 spot 1535. That's the breakdown that would suggest a much more significant high is in place and a larger trend reversal is underway. Now approaching key support. Now, Euro did break out of the May downtrend. Remember, we opened up the week and we said this was one of the best setups into the release because the weekly opening range was set right above key support. We've been talking about 1355 for over a month. That's the 38.2 retracement of last year's rally and the low day close executed on the 24th of June. And the resistance was at the objective monthly open. We tested it on Monday, dropped right down. You had a weekly opening range set right below downtrend resistance. That's the breakout. We confirmed it yesterday with the break above the July open. Now we're testing key resistance. The November low day close, the 618 extension from the decline off the April highs, that converges on the objective monthly opening range high. We're testing that right now. A confirmed daily close northbound of 1492 would suggest a more significant low is in place and a larger trend reversal is underway. Now, in that scenario, a quick extension off that low will yield us some nice levels here. The first one is going to be, let me get you the 100%. The 100 is just a bit higher. This is what concerns me on trying to play long or trying to get long from here, is just a bit higher. You have that 15. Let me clean that up so you can see the level. There you go. The 100% extension, 2 equal legs off the low, gives you 115.11. Would want to see a kind of break there with a little bit more fervor to kind of dissuade any notion that this is just a simple correction and then we're going to resume lower. So a little bit more cautionary tale here, but we are testing a major pivot zone in price. That's the November low day close from last year. We tested it as support the following later that month. Sailed through it on both sides here in March, but there is the origin of the breakdown last month. Monthly opening range high for July. We're testing that right now. Okay. Northbound of 1492, you're looking higher. 1511, watch for a pivot there, but the focus would be on a potential threat of 1576. That's your May low, your January low. That comes in overhead. Here's what it looks like on the daily chart. Let me just bring you that 100% extension there. Okay. One other thing is we now want to try to give some guidance to the slope of this advance. Here's a potential objective low, high, low pitchfork off the lows of the month. Break above that 25% parallel yielded acceleration. We just tested the median line in overnight trade. Confluent uptrend resistance. I'm looking for a reaction here right now today. Capiche? Okay, I forgot to go over really quick what's been going on in overnight. So we got Iran, U.S. retaliated from the surprise attacks that we got a few days ago with dozens of strikes on Iranian sites. Iran has since also hit a port near Egypt. Iran says that the control of the Hormuz is going to stay with them, and then they will hit back today in a meaningful way. I don't know if that was the previous hit we've gotten, but there's been Kuwaiti attacks on U.S. airbase as well. It's easy, simple to say things are escalating, right? Things are escalating. There's even some reports that China might be providing military equipment. And so this thing seems to be broadening out. For the oil trade, we're still holding 85 as of now. That's the high day close for the year. We'll go over those levels in a moment. But really bringing to forefront still that the inflationary picture is quite concerning, and that this thing isn't going to be over anytime soon. So also kind of putting pressure here just on sentiment. So looking ahead, that's euro dollar. Look for reaction right here, right now. DXY pretty darn close to 100 spot 1535 as we speak. Sterling, we got the BOE earlier today. They did hold rates as expected. The vote count was 6.3. And sterling, while we didn't see a really strong reaction to the release, already tempted this breakout yesterday. Right after the Fed, here's the Fed candle. We broke above the weekly opening range. Came a little delayed after the Fed, but it did break. But we never broke that slope. Here's resistance, and the level I told you was bearish invalidation. Looks like it's trying to break now. That's 33.99, right? The 200-day moving average is right there. Here's what it looks like on the daily chart. Confluent resistance with the 200-day moving average. And if we close at these levels or higher, again, that would suggest a much more significant highs in place. You're looking for a potential retest of the yearly open, that major critical pivot at 34.60 into 34.74, the objective yearly open, the 618 of the drop, and those low close from the February low day close. Very nice pivot in price. If we close above this level now, all things held constant, you're looking for a larger reaction there. Northbound of this zone, you're still looking for 35.96, 35.92, right? 35.93. So this needs to get some follow through, okay? The breakout of the weekly opening range does give you a upside break or upside bias into the close of the week. But the one caveat, I probably should have said this at the opening of the webinar, we're heading into the final day of the month tomorrow. Always a time to be cautious. Just from my personal trading experiences and just sitting on desks for 20 years, it's a time where retail gets chopped up. So you want to be much more reserved. Any new exposure, half X, a third X, if X is your traded allotted side per trade, and be a lot more, make sure you have all well-defined risks on any open positions into the weekend, especially as things start to escalate and you're heading into the start of a new month. We get the update on NFPs next week. PCE earlier today came in line with expectations across the board. So core PCE held 3.3%. That's down from 3.4%, right as expected. Headline PCE also came in line with expected. So the inflationary picture, while we're seeing the downtick, didn't really charge much of a major move here, at least not yet. So we're seeing the dollar losses just continue to mount. And the concern is that the inflationary picture is going to start to get out of hand if the Fed doesn't do something soon. So that's sterling dollar threatening a break above 34 as we speak. Next level up 34.65 and 34.74. Aussie completely refuted the break. So remember, this is a good lesson on traders who stick too stringently to specific formations. We talked about the head and shoulders formation and the measured move of that being 68.98 yesterday. We talked about that, but we noted the first key level we can't underestimate is 69.18 to 69.27. Guys, that's exactly where we bottomed. You can't make this stuff up. 618 retracement off the low. The objective monthly open quickly got rebounded as soon as the Fed came out. We didn't close above 69.65. So even into the close of trade yesterday, I wasn't comfortable calling this a breakout yet. As soon as we broke here, that validated it. We even popped through the objective weekly open, that's 69.80, and Aussie is right back at resistance. No one should be surprised about this level. We've been talking about it ad nauseum, 70 into 70.22 since the beginning of the month. That's the 618 of the rally from March. That's the 38.2 of the decline from May. That's the 100 off the high and 100 off the low. Right there. It's also the objective weekly range high and monthly range high. Aussie dollar is approaching resistance right now. If you're holding long exposure, a good area to maybe take a little off the table, raise protective stops. We need to close above 70.23 on a daily close basis to validate the breakout. In such a scenario, you're essentially looking for 70.82. Now, if that low is a more significant low, as opposed to this extension, I would be more interested in looking at this wider extension, taking the objective high, low, high, and look what happens when we do that. The 100% of that extension converges right on that same level. Love it. Love it. So let's just go ahead and put this on the bottom so you can see it. So that's the 1618 off the low and the 100 off of the broader advance off that June low. Both of those converge on 70.82, 70.83. A breach close above 70.23 is needed to validate the breakout. First objective target, 70.80. All right. Look for initial support now. If we were to pull back here early in the session, we would want to see support right back along the weekly open. If Aussie's heading higher on this stretch, losses would be need to be limited to 69.80. Breach above 70.23 needed to mark resumption of the uptrend towards 70.83. Questions on Aussie? Good question. Where's bullish invalidation? So we want to stay constructive above 69.80 near term. If the breakout is legit, a settle back below 69.65 would refute this break. So losses back below this zone would put us back intact for a downside bias. Look, this is still major, right? If you look at this on a close basis, we still haven't marked a daily close northbound of that downslope, which is why I need a break of the monthly high, a break of 70.22 to validate that. Make sense? That's Aussie dollar. Even on the refuted reversal, very clean, very clean. Okay, that is Aussie. I see your questions, Patricia and Mesfin, on Swissy and Yen. We're going to hit both of those really quick. Let me just hit dollar CAD real quick first. So that one's still refuted, that median line. We were talking about the outside day reversal at 40.69 as initial support. That broke. The 618 rally of the near-term advance, that broke. We're now back below that slope. The weekly range broke with that move yesterday. Dollar CAD goes back on the, the dollar goes back on the defensive. Dollar CAD focus shifts lower. So looks like we still may inevitably get that tag that we were looking for early in the month on this decline. We turned right ahead of it, but the 38.2 retracement of the advance off the yearly low, the 2022 swing high gives you 39.78 into 39.82. That's now sort of the next major support target on this trade for dollar CAD. Makes sense. The monthly range low comes in right here. You might want to just keep that in mind. That's 40 proper, but that's the level that needs to break to really fuel the next major leg lower, potentially towards the broader uptrend for the year. So our suspicion, as we've been talking about for the last couple of days, of this resistance here, remember, we couldn't get much momentum thrust above 50. The median line was insanely clear on the last two tags. This break here does suggest, at least near term, there is a threat for some further downside. Questions on dollar CAD? All right. Now the two questions you guys are looking at. Here's dollar yen. Yes, the uptrend has broken. We're seeing a lot happen here. First of all, right before we start, I just want to show you, remember the extreme sentiment hold. We were holding at just 10% long, 90% short. You're seeing some of those short positions start to clear out as this thing pulls out and things start to normalize a little bit. There's definitely some big hands here at play. And the break below 63.33 was all we needed. Remember, we came into the Fed yesterday with a very clean weekly opening range set right above support. I tweeted this. I was all over X yesterday in real time as this was happening. We defended that support right after the Fed. And then again here in overnight trade, boom, break. You slam right into the monthly open. You got one little bounce off that. But here we are now breaking below the 2024 high and the high day close. You're checking key support. Key support, 60.36 into 60.74. The objective monthly opening range low is there. The 618 extension off the yearly low is there. The objective 2024 high week close is there. That's where we just bottomed out. Okay. If the uptrend, the multi-month uptrend is broken, and this is a legit break, initial resistance 61.95, 61.68, still a key pivot we're looking at. Bearish invalidation now comes back up to the monthly open. So you would need to break the monthly open for us to think more significant lows in place and the potential resumption of the upside. But all things held constant, guys, from a technical standpoint, there's some serious damage being done here. Here's what it looks like on the weekly chart, just to put things in perspective. 60.74. There's the high week close from 2024. There's the objective swing high from April. We're there right now. Okay. This is why we need to see a break below this level, a close below this level on a weekly close basis to validate a more significant high is in place. Remember, anytime you bump up against resistance and get the kickback, we want to see a break of support before we validate the reversal. And that's the level on a lateral level that I'm paying attention to. So we're testing that break right now. Below 60.36 ideal scenario, that 618 extension off the low. That's what would need to be continuing or at least validate the reversal and suggest that there's a much more significant pullback in dollar yen. Does that make sense? Ashish, Patricia, questions on dollar yen? It was just the catalyst we needed. And you can tell yesterday, despite the dollar losses you were seeing, the fact that we held there, we could not recover. And the pressures kept on building. Once 63.30 gave out, it's a pretty strong straight shot to hell. We're oversold all the way down into 18 at this level. So the pressure's on. The bears have it as it stands. Initial resistance 61.95, 61.68. Bearish invalidation 62.50. A break below 60.37 would suggest you're looking for the June low, the monthly or the June open, which was right at the June low. That's 59.27. Next major target 57.89, 57.70. That's the November highs and the 2025 high day close. Both of those converge on the 200-day moving average. Really nice levels. Really nice levels. Questions on dollar yen? Patricia says, thanks. You got it. Okay, Swissy. Mesfin's in the house. There he is. Yeah, Swissy's looking good. We're right at support. We're testing a break right now. Oh, we broke. Since the start of the webinar, I was looking at 81 to see if that broke. We did break. So let me take you back. This was actually, again, such a clean trade. I'm not usually a big fan of Swissy. I'm kind of kicking myself because this one was so clean. Remember, we had broken this major pivot level. This was a huge pivot. I'm going to take you back to the weekly charts because that's where this level really comes focus right here. Okay, remember, 81 was massive all throughout last year. That was the 618 extension from the decline off the 2022 high, the break, resistance, resistance, resistance since June. Finally broke above last week. We rallied right into confluent resistance, Fed day reversal. Couldn't get cleaner. Literally couldn't get cleaner. That's the 100% extension off the low, 2 equal legs off the yearly low. This is the 38.2 retracement of last year's range. Uptrend resistance is right there. We just clipped it and turned. Okay, that's the weekly chart. Daily chart. This refutes a breakout of the monthly opening range high. Risk is lower. Risk is lower. We made below 81. We need to close below this today to validate this reversal. And I would keep the focus on a test of slope support and this January swing high at 80.41. Okay. See that momentum trigger? Really quick break, really quick refute. We're right back below 50. Watch today's close. Momentum below 50, price below that parallel would be the nail in the coffin. Here's what it looks like on the daily chart. 80.41, the January high, also now converges on basic uptrend support. So we're looking for a reaction there. Losses below 80 would validate a larger trend reversal is underway. That's the April high day close. It was the spike high they made here in June before the breakout. It was the low for this month, all at 80.09. Initial support 80.41, followed by 80.09. We need to close below this to really suggest a larger reversal and trend is underway. Initial resistance back at 81.24 into 81. Look here. Okay. I guess you could put this as near-term. I didn't really think about bearish invalidation, but I guess you could put this as near-term bearish invalidation. If we were to close back above 81.24, that would suggest that the breakout of just the objective weekly opening range is nullified. So I'd be comfortable working with that for now. Ideal scenario in a trade like this, the weekly open is the bearish invalidation, but I think we've traveled quite a distance here. We want to keep it close to the chest. So watch 81.25, keep that as bearish invalidation near term. Focus is on a reaction near 80.41. Need to close below 80.09 to suggest larger webinar is underway. Ashish says, thanks, you're more than welcome. Ashish, Mesfin says, your morning webinar is the best upside. Make a lot of sense. Timing is everything. Love it. Cheers, Mesfin. Hey, they're not my levels, brother. It's the market's levels. I'm just helping you guys find them, right? So that's dollar Swiss. Really clean. Love the slope. Love just the broader levels here converge. Really, really nice. So we'll be tracking this one over the next couple of days. Any other trade setups on the FX crosses, do let me know. Really quick look at gold. I think we get a near-term breakout here soon, but we're still in the consolidation range. We're still in the consolidation range. So guys, there's really nothing to update here. The monthly range is preserved with just the first 3 days of the month. We're still trading in that 3-day range. Look for a breakout of this consolidation to clear the way. Key support 39.51. Beyond 39.51, big problem. Topside break above this slope. You're looking for a retest of that 75% parallel. But more importantly, it's going to be a potential run on the yearly open and that basic 38.2 retracement of the drop off the highs just from April. Both of those converge right here. So still more to be desired on gold. Looking to see when we get this multi-week, you could even say multi-month consolidation pattern out of the way. But dollar weakness certainly is giving this some upside potential here on the near term. All right. Chandra said, you are spot on, Mike. DXY hit 100 spot. Did it just do it? Here we go. All right. Here we go. So a close below this level. If we were to pounce lower, we would want to see a firm close below this level to suggest the reversal is underway. This is a major key level. Here's the weekly chart. My only warning to everyone in the room, again, is that tomorrow is the last day of the month. So price action can get wicked on the intraday month, on the intraday charts, especially on that monthly rollover. There's a lot of position rejammering, a lot of portfolio rebalancing, and that could really wreak havoc on stuff. So stay nimble into the close of the month. All things held constant. Below 100 spot 15 is quite problematic for the DXY. All right, oil. So, you know, those headlines are going to continue to come fast and furious. The only thing I want to say is, guys, 85 continues to pay dividends. It's a major pivot in price. That was the high day close for the year. We've been talking about it since March. We tested it as support, was the April low week close, low day close. Can't make that up. Break below June is what propagated the last decline. We sat there for 4 days before finally breaking out. Here we kind of failed to that 79.60 again. Here's 85. This is near-term resistance. Above 85, again, you're looking for 92 into 91.78. That was the resistance zone we talked about last week. We need to see a breach above that to put this in a straight up bias now. We refuted that whole decline off the April high. That hasn't happened yet. We're going to be subject to all the headlines. There's nothing to do here, guys, but kind of track the war and continue to sit tight. Above 85 on a closed basis puts you right back on course towards 92, 91.78. Look for a larger reaction there. We would still need to necessitate a break below the 200-day moving average. That's 618 to suggest, hey, the high is still in for a near term, and we're still looking for a potential test. The yearly open from last year, that's 71.50 level. That's the 2024 August low day close. Nice level. That's also where we kind of opened up there. So levels are clear. Momentum is not. And clear-cut directional bias is not, because this is completely driven by the headlines. So we'll continue to track that. Last but not least, here's a quick look at what's going on with the Bitcoin trade. 63,412 still held. That's the third consecutive day holding that basic 38.2 retracement of the advance off the monthly low. Remember, we're still working with the base case scenario that Bitcoin is indeed trying to bottom. Okay. And if that interpretation is correct, based on the weekly chart that we highlighted early in January of that level, 57,885 being critical, if that interpretation is correct, losses need to be limited by 61,244. We still need to break above 67,322 to validate the next major leg of the advance. In the stock realm of things, just as a quick breakdown here of what's going on, guys, it's been a pretty clear trade. We're still in that consolidation on the S&P 500. We dripped down intra-week way below that slope, but we haven't closed below it. Here's the S&P on the daily chart. Okay. Here's yesterday's close, pushing through. Here we are right back above. And this is why, guys, we would necessitate the weekly close to validate those breaks. Now, we're not out of the woods yet. Why? Look where we're stopped right now. The median line for the formation we've been tracking off the yearly low, which is just a mirror, by the way, of that basic slope. All we did was take a pitchfork and mirror it to this basic high. That's simple. I can't tell you how many times, just as a side note, people are like, why'd you sell there? Why'd you buy there? Well, there was a line there. It's that simple. Okay. This is not, neuroscience. So what am I looking at now? Former slope support. Both of those should offer resistance right now. Okay. If we pop through that slope, well, now we're right back in the range on the weekly chart. Nothing's broken. If we close below this slope today, the risk is that you've actually just broken support and tested it as resistance. Now, things I'll be looking at: momentum above 50 on the daily chart, back above that slope would be constructive. Certainly a breach of the monthly open at 74.83 would also validate a more significant low is in place. All things held constant, I'm looking to see what happens on this kickback here today, right now. NASDAQ, the one that showed the most risk, did see one of the biggest drops. Here's NASDAQ on the weekly chart. We turned right ahead of that 50% retracement. That was near-term support at 26,801. The low registered at 27,176. The 25% parallel of this multi-year upslope is there. Again, what we would need to refute this break is a close back above 28,219, 28,196. That would suggest we've actually gotten a near-term. A good friend of mine on Twitter, actually, my former business colleague, said on Twitter, we might get the war shout, which I thought was pretty funny. So maybe that's the case, but you would need to close back above that slope, back above that lateral level, the June lows, 28,219. Dow, right? No surprise. Kind of the most limited of the decline. We haven't even tested a basic 236 of the yearly range. We're still holding below 52,951. That was resistance at the 3618 of the advance off last year's low. And the focus still remains on a breakout of this key range. So of all the major indices, this is the one that's a simple range break is what I'm looking for near-term guidance. All right. A little over on time, but we have a lot hitting the markets. Again, the BOE, we covered PCE. We still have the BOJ on tap. So with the dollar yen, obviously, this is going to be a major focus. That thing is still continuing down. Let's take a quick refresh here to really quick on the sayonara. 159.27. That's the June low. The June open. That's your first level. Next level down, 57.70, 57.90. November high, 2024 high day close. Major pivot in price. The 200-day moving average, guys, is right there. So on a resumptive move below 59.27, that's your next major play. Okay. Don't chase this trade. For the love of God, if you're not already in these trades, guys, stay nimble. We are heading into the monthly close. Respect that time period. My personal trading really dwindles over the next 48 hours into the monthly open. If I do take any positions, they're going to be, like I said, 1/3, 1/2 X, if X is your normal trade size. And please, into the close of the week, make sure we have all our risk well defined. We'll take a look at all these setups and more tomorrow, right into the close of the week, right into the close of the month. Stay nimble. Watch the BOJ and overnight trade. We're pretty spent on US data for the rest of the week, but we do get core inflation figures out of the Eurozone tomorrow. So watch that print, especially with the Euro now testing this breakout and now testing the upper parallel. Watch this right now. Top side break, you're looking for 1576, but you're testing slope resistance. We've broken that 100% extension. Drop that. You're basically on pace for a test of 115.76 if we close northbound of this zone. Momentum looking like it wants to accelerate here too as well. But watch, respect that slope. We just added this, so it doesn't have too much grip behind it. But if it is the right interpretation, you could see some kickback here early in the session. All right. Michael, thank you for all your updates. Mesfin, Chandra, Ashish, Patricia, everyone who's asked questions, Latanya, and everyone who's in the room. Thank you. I will see you all tomorrow morning. Best of luck trading. God bless.